Hey guys, hope you're enjoying your Wednesday. Today I'm bringing you what I would call a satellite holding. A lot of you guys know I talk about core holding ETFs and satellite holding ETFs. I would definitely call this a satellite holding ETF. What this is concentrated in is the Dow Jones Industrial Average. And we'll go over a bit about that. And there's a couple ETFs that go over the Dow Jones, but this one is dividend weighted, and we'll talk about that real soon. So if you're new here, please consider sharing, subscribing, doing all that good stuff. Down in a pinned comment down below, Amazon link. If you use that link, do your Christmas shopping, whatever. Amazon will send me a small commission on qualified purchases, and it doesn't cost you any more to do so. That's a great way to support this channel. Also down there is my Teespring link. Check that out. Give me some feedback. I price those lower than what Teespring suggests. I know that stuff's a little bit pricey, but I did lower the price that Teespring suggests that I sell it for, just to see if I can offer you some more value there. So please give me some feedback down below on that. M1 Finance, I'm going to have a new portfolio reveal on M1 Finance real soon. Also down there is a referral link for M1 Finance. So if you've never been invested in M1 Finance and you want to give it a shot, if you deposit $100, you get $10, I get $10, and it's a win-win situation. So other referral links and stuff down in the description below. I'd love for you to check them out. I appreciate all of you that support me in what I do. And yeah, let's get into it. So what we are looking at today is ticker symbol DJD, and that's the Invesco Dow Jones Industrial Average Dividend ETF. Now, what this investment seeks to track is the investment results of the Dow Jones Industrial Average yield weighted. So there's a Dow Jones Industrial, usually has about 30 stocks in the Dow Jones Industrial. I think it's down to 28 now. And so what this ETF is a holding of all Dow Jones stocks, but weighted by dividend yield highest. Okay. It has a 30-day SEC yield of 3.9%, distribution yield trailing 12-month of 3.23%. I calculated it, and this is a little more like it. I'll show you later on. Seeking Alpha has been weird with statistics. Ooh, I said statistics. See, I can't do it again. Seeking Alpha has been weird on stats, so you kind of have to take Seeking Alpha's stats with a grain of salt. So what is the Dow Jones Industrial Average? Oh, this thing, ETF, has a expense ratio of 0.07. It is pretty small with only 86.76 million net assets. So what is the Dow Jones Industrial Average? It's one of the oldest indexes in the country. So the Dow Jones Industrial Average, also commonly referred to as the Dow Jones or simply the Dow, is one of the most popular and widely recognized stock market indices. It measures the daily stock market movements of 30 U.S. publicly traded companies listed on the NASDAQ or the New York Stock Exchange. The 30 publicly owned companies are considered leaders in the United States economy. The DJIA is one of the stock indices created by Dow & Jones Company founder and Wall Street Journal editor Charles Dow. When the Dow Jones launched in 1896, it was comprised of only 12 U.S. companies that were mainly engaged in industrial activities. Over the years, the index changed along with the economy, and its composition now includes companies in other tech sectors such as technology, health care, and retail. The index changes when one or more components experience financial distress that renders it a less important company in its sector when there is a significant shift in the economy that needs to be reflected in the composition. So there's not really a hard rules-based approach to being included in the Dow Jones or being booted out, but they basically, you need to be a strong U.S. company. So what we'll do, we'll look at those companies, because recently, right, I think it was ExxonMobil, what was the other one? Raytheon. I think there was a couple that got booted out recently of the Dow because of financial difficulties. So what we'll do, we'll look at the portfolio composition like we normally do. We'll take a look here. So, 26 holdings. So it's no longer 30. It's down to 26. The top 10 has 58.21%, and the other 16 makes up 41.79%. 100% of it is all in North America. 100% of it is large cap. And this particular ETF, Morningstar, categorizes them as a large cap value fund. So we'll look at the top 10 holdings. That's interesting. Dow is the number one holding here. Next up is IBM, Chevron with 6.5%, Verizon with 5.75%, Caterpillar with 5%, 3M with 5%, Walgreens Boots 5%. Stock Ninja just did a excellent video on Walgreens Boots Alliance. I'll link that up here and down in the description below. Check that out. That was a great video on Walgreens Boots Alliance. I own Walgreens Boots Alliance, and I think it's a great value at this point, but you have to be patient with it, I believe. Coca-Cola, 4.88%, 4.74% for JP Morgan, and 4.3% for Merck. So sector exposure, we're at just under 18% for information technology, 16% in consumer staples, 13.5% in financials, just under 13% for healthcare, 11% in industrials, the 777s in materials, 7.5% in energy, 7.18% in consumer discretionary, and 5.48% in communication services. So it covers it covers all the sectors except for real estate. Is that right? 1, 2, 3, 4, 5, 6, 7, 8, 9. No. Real estate and, help me out, guys, utilities. Real estate and utilities. I think there's another one missing there, but you know what? This only has 26 holdings, so let's check out all the holdings. So I left off with Merck. This is interesting because this is by weight. Okay, something's off. I think this is correct and this is wrong. But what did I miss? It has Cisco Systems, Travelers Company Insurance, Intel, Johnson & Johnson, Amgen, Goldman Sachs, McDonald's, Procter & Gamble, Honeywell, Home Depot, United Health, American Express, Walmart, Microsoft, Nike, Apple, Visa, and looks like Invesco has some short-term bonds in there. So it's really a nice concentrated portfolio. And of course, this particular ETF is weighted by yield. So they take all the Dow components, all 26, and they give the highest weighting to the highest yielding company. Now let's look over to the stats. I believe that this will not have very much turnover because of, the Dow doesn't change very much. So we'll look at key stats. Annual turnover ratio is basically nothing, 0. So that's nice. And this inception date's been, this ETF's been around since December of 2015. There's the 30-day SEC yield, annualized 3.85. That's actually what I measured. So if we go over here to Seeking Alpha, look at the dividend history, they have dividend growth here. 1 year growth of 29%, 3 year of 15.76. That's pretty hefty, and that's that big jump here. We just had a 42-cent quarterly payout on there, so that's nice. So how did the Dow Jones do if you weighted it by yield versus how it's traditionally done? I believe it's traditionally done by market cap. We'll check it out. So I already have up here the DJD, and I will benchmark it against the Dow 30 for as long as it can go. We'll chart it, and not surprisingly, the DJD underperformed the Dow Jones market cap weighted. Usually that's not a surprise, because if you weight by yield, normally when you have a higher yielding stock, it's not performing well. So that's going to be a drag on the overall return. So the DJD total return since December 18th of 2015 was 56.3% for an average annual total of 9.77, whereas the Dow Jones market cap weighted was a total return of 80.68%, average annual total return of 13.14. So what does this tell you? If you like the Dow Jones and you want yield out of the Dow Jones, the DJD ETF does a good job of doing that. If you want exposure just to the Dow Jones Industrial Average, the DIA is a way better total return fund. It's expensive as far as per share price, but it does pay a monthly dividend, and I will bring a review of the Dow Jones. I might. It's kind of a waste because I kind of just covered it right here because it's the same thing. It's just weighted differently. So the DIA pays monthly. It's a lower yield, higher per share price, and will give you greater total return. The DJD, higher yield, won't give you, it's a lot smaller share price. It's like $40 a share, but it won't give you the total returns of the Dow. Okay? All right, guys. Hope you enjoyed. Enjoy the rest of your week. Leave a comment, like, share, subscribe, do all that good stuff. Use those referral links and Amazon links and Teespring links and all that. And you guys enjoy. We'll talk to you later. Have a great day. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.